Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two strong buy betting stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. As I'm sure a few of you are aware, this past Sunday was the 59th Super Bowl, and it is estimated that sports enthusiasts wagered over $1.4 billion on this year's game. So that got me on the hunt for some gambling and sports betting stocks, and I narrowed it down to two that are big names in the industry and both come in with a strong consensus from Wall Street. So we're going to take a look at these companies, what their focus is, and of course what those Wall Street analysts are predicting for the stock's future. Just before we get into these two betting stocks, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Also, to celebrate Valentine's this week, TipRanks is having a 30% off sale, so you can follow the links in the description down below to unlock some premium investment tools. Now let's jump right into these two strong buy sports betting stocks. First up, we're taking a look at Flutter Entertainment. They trade under the ticker FLUT, currently priced at $268 per share. This is a stock we've touched on before, more recently back in August to September. In the past year, it has gained 25%, and in the last 3 months is up about 7%. Flutter is a global online sports and gambling website and is one of the largest in the world. They are the parent company of FanDuel. Their business spans online and retail betting, casino gaming, poker, and daily fantasy sports, and they generate revenue primarily from wagers placed on sports events, casino games, and other betting activities. In the US, FanDuel is its flagship brand, commanding a leading share in online sports betting and iGaming. Globally, Flutter serves over 14 million monthly active players, with a strong presence in markets like the UK, Ireland, Australia, and the US. The company will share their fourth quarter earnings report in a couple of weeks on February 27th. This does follow an earnings and revenue beat for their third quarter back in November. They saw their total revenues grow 27% overall and US revenues grow 51%. For their third quarter, they reported earnings per share of 43 cents, beating expectations by 20 cents per share, and revenue came in at $3.25 billion, beaten by $240 million. The company announced iGaming AMP base grew 43% with successful new gaming titles and announced a share repurchase program that was launching back in November. They intended to repurchase up to $350 million worth of shares. Just last week, a 5-star analyst from BTIG increased their price target on the Flutter stock. The firm said they are optimistic around iGaming market expansions and see higher odds of several new states launching over the next several years, though visibility at this stage is very low and expert opinions vary around which states are higher or lower probability. Flutter Entertainment has 20 current analyst ratings and does come in as a unanimous strong buy. And with those 20 analyst ratings, the average price target is $313, implying an upside potential of over 16%. Looking at those recent ratings down below, we do have a couple analysts bumping up their price targets recently. Our high-end price target comes in at $349 for an upside of nearly 30%, while our low-end price target is a couple at $275 for a slight upside of 2%. And for our second sports betting stock, we have the very popular DraftKings. They trade under the ticker DKNG, currently priced above $42 per share. This is another one that we did chat about before around the end of August. They've seen a bit more ups and downs this past year. They're down over 2% in the last year, up 42% from lows back in August, and in the last 3 months are actually down slightly, just over 1%. DraftKings is another leading online sports and gambling company, but they are more focused on the United States. They operate in 3 main areas: online sports betting, casino gaming, and daily fantasy sports. Users can place bets on professional and collegiate sports, play casino-style games like slots and blackjack, or participate in fantasy sports contests where they draft virtual teams and compete based on real-world player performance. They invest heavily in promotions like jackpot events and happy hour bonuses to help attract their users and leverage partnerships with major sports leagues and teams for branding and market access. DraftKings is sharing their fourth quarter earnings report in just a few days on February 13th. This does follow an earnings and revenue miss for their third quarter back in November. Despite revenue growing 39% year over year, it did fall short of expectations. For their fourth quarter, analysts are anticipating a loss per share of 10 cents, which was in line with last year's. Looking at their third quarter, it came in at a loss of 60 cents per share, which was 19 cents wider than analysts were expecting. And while that revenue did grow 39% to $1.1 billion, it did fall slightly short by just $10 million. The company did introduce 2025 revenue guidance of $6.2 to $6.6 billion. Last week, we did hear from an analyst at TD Cowen who reiterated a buy rating but did lower their price target by a few dollars. They said that they previewed results for the gaming sector and that they are bullish on 2025 amid a disappointing end to 2024. They remain cautious heading into earnings as near-term headwinds suggest downside risk to results. So with that word of caution, this might be one to watch until after their earnings report to see how the stock reacts there. But with 24 analyst ratings, the DraftKings stock does come in as a strong buy with 22 buys and just 2 holds. The average price target comes in at $52.20, implying an upside potential of over 21%. Looking at those recent ratings down below, it was just a few days ago that we got our high-end price target of $60 here from Needham for an upside of over 40%, a lot of them in the double-digit upside there. As we go back to December, we'll find our low-end price target, which is a hold rating at $36, which would be a downside of about 16%. So that is a quick look at 2 big names in the online sports betting world, both coming in with a strong buy consensus from Wall Street. Let me know your thoughts on these 2 companies and which one catches your eye the most. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always stick to your own research and due diligence. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.